It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, good morning, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID Livestream, Series 13, Episode 3, which is Episode 75 in the aggregate, starts here. So, SIBO have claimed a rather curious form of first mover advantage, a near preemptive write-down of their stake in ErisX, reflecting the crypto winter. Frankly, struck us at Exchange Invest as a canny move, as now all those afflicted by that crypto winter are under greater pressure to justify their valuations going forward. It's also great to see, after various rainstorms precluded his doing so a couple of weeks back, the Prime Minister of India, Mr. Modi, he launched the Gift City financial exchanges in a very, very busy day. The International Bullion Exchange of India, IIBX, got its marching orders, and also we saw peace in our time between Singapore's SGX and the Indian regulators. The Nifty 50 may still be traded on Singapore's SGX, but formally it's been launched in its new future home of Gift City in India. Last week, by the way, just talking about crypto, we published an article in Exchange Invest where we gathered some data on job losses across a selection of leading exchanges. No sooner did we manage to publish it than indeed CoinFlex joined the fray with a few more redundancies. You can catch that article discussing all of the layoffs that there were during the course of the year so far on Medium and LinkedIn. Just look out for me, Patrick L. Young. Finally, this week, all the best to Bursa Malaysia's CEO of derivatives, Samuel Ho, as he's going to be taking up a new regional role based in Singapore with the CME. Our guest today, ladies and gentlemen, well, the bottom of the screen says it all. Stephen M. Sears is literally the best. That was a fan message that came in from no less than one of the most esteemed analysts in the sphere of options, Katie Schaffer, as fast as we announced the fact that Stephen was going to be our guest this week. So, Stephen Sears is developing your options this evening, ladies and gentlemen. We'd love a little love. We'd love to hear your questions. Who is Stephen? Well, he's president and COO of Option Solutions. He's helped democratize strategies that have long been used by sophisticated investors to better navigate the financial market. He's dedicated himself to improving investor education and narrowing the gap of information amongst individual and institutional investors. Steve actually pioneered coverage of the options market in the media way back. He did it for some of the world's most important publications, originally Dow Jones Newswires, and the Wall Street Journal, and indeed has long been an esteemed columnist with Barron's. Stephen is the author of The Indomitable Investor, Why a Few Succeed in the Stock Market Where Everyone Else Fails, a book which likewise was written to narrow that investor information gap. Many people credited him, including SIBO, for naming the SIBO Volatility Index, the VIX, the fear gauge, amongst his other esteemed achievements in a long-standing career. He's a member of the Economic Club of New York, co-managing partner of a commercial real estate firm, and chairman emeritus of the University of Georgia's Red and Black Publishing Company, and a former trustee of his college. Stephen, good day to you. Where in the world are you today?
I'm about 130 miles east of New York City on Long Island.
Fabulous. It looks like a beautiful day there in Long Island altogether. Thank you for joining us. It's really a pleasure to have you here today, developing and discussing your options. Absolutely fabulous also to see a few of our regulars already checking in. Good evening, Peter Secon. I too am looking forward to a fabulous show this evening with Stephen Sears. Good evening, Ian Bonser. It's lovely to hear from you too. And hello, Tom Laverty. Good evening, Patrick and all. Have managed to catch IPO Live. Yes, you did, Tom. I'm delighted you managed to make it in time this evening. But of course, we're always available on a repeat as soon as this live stream is over. Simon Huckle, good evening. Looking forward to another brilliant IPO. Oh, you flatter. It's lovely to see you again this evening, Simon. And last but by no means least in this segment, Craig Richardson. Good evening. Looking forward to another great show. Thank you so much, gentlemen, and indeed Katie Schaffer, for your lovely comments. Delighted to have you saying that Because apart from anything else, you got to bear in mind, ladies and gentlemen, this is our final live episode until September, because we're about to take our annual summer break of IPO-VID. I'll still be working at everything else, and Exchange Invest will still be in subscribers' inboxes. Don't worry about that. So, Steve, talking about inboxes, reporting, and stuff like that, tell me about it. How did you get into the financial business originally?
Well, I had originally wanted to be a political reporter. I wanted to cover the White House, and the bureau chief told me that I need to get financial experience. So I went to New York and began to work for Dow Jones and the Journal. And then I realized very quickly that that was probably the greater story than covering politics at the time. That would have been back around about 1995, and I've been there ever since and loving it.
Super. So you started in New York, but then, if I remember correctly, you at one stage careered across to London to make a transatlantic career of things.
No, I wish. I've been very lucky to be able to travel, and Mother Dow sent me all over the world.
Right.
But I'm never able to work in the bureau. They always had me in New York.
Okay.
And, it's the one thing that I wish I could have done. I did go to Oriel College, Oxford University, but that was as a student.
Ah, well, that's an exciting place to have been at. Quite summer indeed, Oriel. So that's fascinating. Amongst other things, actually, you've got something in common if you're an Oriel man with the chairman of Valerium. So all the Valerium shareholders watching this evening will be excited to know, because you went to the same college as Richard Poulton. How very interesting. Now, okay, so you're a reporter. You're working around the finance beat. You got more and more into wholesale markets, other things. How come you ended up breaking open the coverage of the options market?
Well, I'll tell you, one day I got moved through all the major finance beats, asset management, banking, corporate finance, all that sort of stuff. And I was always fascinated with what happened beneath the market surface with the trading. And it always seemed to me that there was much more to the stock market than just that it, saying at the end of the day that it went up or went down, and there were these financial results or economic data. I got called into the old man's office one day, and he says, here's the options market. And I said, what the hell is that? He says, we don't really know, but we think it's important. And with that mandate, I went out and began to cover it. And I was so lucky because nobody had ever really covered it in a really serious, substantive way. And not knowing anything, but just working it out like a beat reporter, I wound up meeting and being trained by some of the real legends of the industry. And it's my experience is like that of so many others. Once you sort of get the options bug, or you get bit by options, it just sticks with you because it's a way of thinking and acting.
I totally agree with you. I mean, I think the options business is just fascinating. And for all those people who spend their whole lives in 2 dimensions, I have to say, investing in 3 dimensions has just been the most amazing thing. It's such a different feeling altogether. So tell me a bit about that. I mean, was it difficult in the early days when you're this reporter who doesn't know a great deal about the options business, and you're trying to ring people up who, I mean, the options business, they weren't used to talking to the media at all. Was it tricky?
It was, because it's so multifaceted, and then to understand options, you have to really understand stocks. But nobody really understands stocks in my mind quite like the options guys do. So, there's a saying in the newsroom that there are no dumb reporters, only dumb reporters who don't ask questions. And I asked a lot of dumb questions, and a couple of people sort of took an interest in what I was doing, or took pity on me, and I'd wind up asking questions about implied volatility and realized volatility and various strategies. And guys would say, call me up at the end of the day, and I would, and then I'd get these master classes in this market and in these concepts and these facts from people who are now generally recognized as the most successful options investors in the world, and some of them have become multi-billionaires and don't even talk. They're not actively involved in the markets anymore in the same way. I'm just super lucky. Yeah,
I mean, it was an incredible time, because this is the sort of late 80s through mid 90s, when things were all completely crazy and so on. You were building up this beat, and that was really the first time that I think options hit the mainstream, and then technology started kicking in from all angles.
I mean, that was fascinating because the open outcry trading pits were always, to me, these completely egalitarian, fascinating places. Despite what the regulator said about how they actually conducted business, I love the idea that anybody from any background could basically walk down to the exchange, get a job, learn how to trade, and make something of themselves. And that lifted so many people up and changed so many lives and really changed the markets. But then as the exchanges began to compete with each other and the markets became a little bit bigger and a little bit more vibrant, technology came in, and I was very fortunate to have been asked to join the International Securities Exchange, which was the first U.S. exchange to introduce electronic trading. And what we saw happen from that moment on is that the markets, which had largely been like, say, 70% retail, 30% institutional, flipped. Market quality dramatically improved, spreads tightened 80, 95%. And then you began to get sort of the first pioneer institutional investors. And then the trading volumes in U.S. options, which had been about 1 million contracts a day, and that was a big day back around 2000, are now, fast forward, in excess of 35 to 40 million.
It's an incredible number, that when you look at the way that also the impact of electronic trading has had on the whole futures, options, derivatives business as a whole, but certainly the what was formerly the floors of the stock options market seem quite incredible. The one story I always treasure was when I first wrote Capital Market Revolution, and then about 5 months later, so it must have been getting on for the end of 1999, I remember going to PCoast, the Pacific Stock Exchange in San Francisco. And that was fascinating. I mean, the thing that was fascinating to me was, of course, that all these guys were sitting with their HP medical tablets, which they were using. Because, I mean, nobody had ever seen a tablet computer at that point in time. These things cost, I think, $10,000 in 1999 dollars. And it was just fascinating to watch them doing that, because still in London, everybody was handling lots and lots of sheets of paper for the volatility numbers and the deltas and so on. And it was a really interesting conversation, because these guys were all standing around chewing gum, and they're all said again, well, how do you, why are you telling us that this market is going to end up going electronic? And I said, well, what's the difference between, the medical tablet you've got here has got more power in it than the rest of the exchange's technology. You're shouting at each other. And what are you trading today? And they look at me like I'm an idiot. And they went, well, we're trading. And then they reeled off, HP, Microsoft. This was in the days before Google. All of the names that were actually driving the technology. It was quite an incredible. And then, as you say, ISE came in and totally changed the game. So what did you actually go into ISE to do?
I joined the ISE from the Philadelphia Stock Exchange. I worked with Sandy Fruschers as his senior advisor. Sandy was the chairman and remains a very good, close friend. At ISE, I was brought in to really crank up strategic research and to help David and Ivers at the time think through what the exchange's next steps might be. So at various times, I was involved in strategic planning, competitive intelligence, wrote the first business plan for the index business, in charge of listings, payment for order flow, lobbying Washington, the media, statistical analysis, all of those things. It was still a young company, and in those moments in time, you do a lot. And I was able to wear a lot of different hats and get a lot of different experiences.
Well, also, I mean, one of the things about, the co-founders of ISE, David Krell and also Gary and Katz and so on, was they always kept that company incredibly lean. So that's why I'm smiling, because I remember everybody had 2 or 3 hats, because even when you were the global head of marketing or whatever it was that Bruce Goldberg's title was, he still actually ended up doing an awful lot of his own work, because he only had like 1 or 2 assistants, where other exchanges had about 10 people doing the same function.
David once said, he referred to it as something like it's the marble office syndrome. And he said, if you go to visit a company and the executive suites and every place else is like bedecked in marble and fancy leather and art, it tells you a lot about the culture. And they were always very shrewd in how, David in particular, and how he ran the business. And I look back on those times that I spent with David and with the late Ivers Riley's, as it's just really great days. I was so lucky to spend time with them. They were so wise, and they understood the options business almost to the point of being beyond facts. They saw what other people didn't. And I was really lucky to be able to
Yeah.
work with them as closely as I did.
I mean, I'm sorry to interrupt, but I have to say I'm feeling pangs of jealousy, because you're absolutely right. The late Ivers Riley was a great man. He'd run the Hong Kong Futures Exchange, and he just oozed wisdom in terms of understanding how markets work and people worked. And I think, David Krell, similarly, just such a visionary. I mean, when he came forward with, we're going to completely make an electronic options market, and people were mostly laughing at him. And all the joke was on the other foot within literally 36 months of that thing launching in 2000, when, as you say, it had flipped to an institutional market. They are great men, and I must say, both David and Gary Katz, I think, are two of the finest people who ever graced the exchange parish that I had the joy of encountering to any great extent. Likewise, Ivers. So you developed all this business within ISE. ISE was an incredibly dynamic business. You mentioned the fact of its wonderful approach to budget control. I seem to recall in the year that they were bought by Deutsche Börse, famously, Deutsche Börse had spent 1 million euros, which would be more than $1 million, on their annual general meeting. And David and Gary fell about laughing because they'd actually spent, I think they got the upstairs room at the pizza place around the corner from 50 Broad for free, provided they offered to buy beer and pizzas for whoever was staying after. And quite literally, the AGM took place up there, and thereafter they wandered back. Literally, Gary closed the meeting by saying, "Okay, the meeting's closed, and whoever wants a beer and a pizza will be downstairs." And that was it. I think 50 pizzas were purchased and about 150 beers.
David always said you treat the company money like it's your own, and he did like he talked it, and I think that permeated the culture, and he was right.
Totally. No, they're fantastic. I mean, they were such an amazing group of renegades in so many ways, yet entirely from the establishment. I mean, having run the New York Stock Exchange's options market, et cetera, et cetera. Oh, those are amazing times. Sorry, I'm reminiscing more than you are nearly almost here, Steve. It's so exciting to hear these messages. Good evening, Marcus Ward. It's lovely to see you. Thank you very much for joining me. Now, remember, ladies and gentlemen, one message we already got today was, there are only dumb reporters who don't ask questions, I think was, if I paraphrase correctly, what Stephen was saying earlier on. Now, look, guys, there are only dumb investors who don't ask questions when you've got an expert in the options market in front of you like Stephen. So whatever you want to ask, throw in your questions. We'll be delighted to hear you this evening. So from ISE, how did you progress? I mean, your career's already, I have to say, made a couple of quantum leaps here. I mean, you jumped into working for Sandy Fruscher, another awesome person, incidentally, probably the pithiest man who's ever been a chairman or CEO of an exchange I can recall.
That's a fact. Really, that
is a fact. That is a fact. I mean, the first time I ever encountered Sandy was at some conference, and it was actually another exchange CEO beckoned me over and made me sit down in this chair for lunch, and he said, "Just don't say anything, just listen." And I mean, it was an hour of Sandy's phenomenal one-liners. Rome wasn't burnt in a day was one of the offers that he delivered in the middle of some diatribe. As a very, very pithy individual, former NASDAQ vice chairman, in fact, most recently in the parish, and now director of various interesting new technology companies, I think in biotech or something.
He is. He's involved in, he's indefatigable. He's involved in so many different things. I remember my very first conversation with Sandy. He'd just been appointed to the PhilEx, and he said to me, in typical Sandy fashion, he was waxing rhapsodical, and he goes, "Well, the Philadelphia Stock Exchange has been around for 200 years, and in the Roman Empire," and he made some remark, and I said, "Yes, but with all due respect, Mr. Fruscher, the Philadelphia Stock Exchange is not the Roman Empire." and from there on out, we became immediately very close friends, and I'm still in regular touch with him. He's fantastic.
No, I mean, it's amazing because that whole Philadelphia Stock Exchange story, I think, is quite fascinating because, I mean, Sandy came in, some people saw him as the man who came in to kind of close the exchange down because his background was in real estate. And then you had this amazing, exciting journey as the exchange tried to jump forward and stay relevant.
What a lot of people don't realize is that the Philadelphia Stock Exchange is the oldest stock exchange in America by 2 years. And it was only after the Erie Canal was built that everything really shifted from Philadelphia, which was like basically the founding capital, to New York. And when Sandy was brought in, the Philadelphia Stock Exchange, I would say it was a little bit down on its luck. It was very innovative. They had some of the most pioneering traders of block stock there.
Yep.
And the trading pit itself, the trading floor for options, was quite something. And Sandy was brought in, initially, I think, to sell it. But when he got there, he properly saw that there was enormous value in the exchange. And in ways not dissimilar really to what David Krell and Gary and Ivers and everyone did at ISE, Sandy did to the Philex. And he inherited what had been a rather parochial or provincial enterprise, and I would say he modernized it along with the help of a really great executive team that I was really happy to and proud to be part of. And then of course David and moving the Philly, demutualizing the Philadelphia Stock Exchange was probably just as hard as as like waging battle in Afghanistan. Some of those market-making families were so powerful, but Sandy reached out and he brought in firms like Susquehanna from Bala-Cynwyd, who really hadn't been part of the Philly community, and that catalyzed everything. And then the onset of technology at the ISE further catalyzed all of that. And I was so happy to be at the ISE with those guys. And then that was the first exchange that went public, and I stayed there for about a year and a half afterwards. And then I thought the exchanges were going to go back to being, more like utilities. And in many ways that was true, in some ways not. And when I left Dow Jones, they always said to me that I always had a job if I wanted to come back. And after working so intensely, not really seeing my children ever, you'd leave in the morning and be back at the nighttime, they'd be asleep, and you'd do that 5-6 days a week. I went back to Dow Jones and was asked to be a columnist, and that's been fantastic.
So you joined Dow Jones, you created a column, and effectively you continued to champion the options market at all points in time, which I think has been fantastic, because it shocks me to this day that so few other media have actually taken such an interest in drilling down into other areas. And it's something I think Dow Jones and the people at Barron's and everybody deserve a lot of credit for, because you're really still there. You're the options market champion amongst a relatively few people. I mean, there are a few people in the digital age who've become kind of digital influencers and so on YouTube, but nonetheless, you're the only person coming out of legacy media, which I think is a bit of a damning indictment of the rest of the legacy media, actually, if I may say so.
Well, I mean, I think that, the Barron's and the Journal have always been sort of on the cutting edge of this and very serious financial publications. What I've been really pleased to see, like when I first started, it was just a smattering. Reuters had a little bit of coverage. Bloomberg did not really cover it in any meaningful way. And even the Times occasionally messed around with it. But what happened, frankly, is when you went back to the grandfathered options and the gentleman's agreement amongst the exchanges, that really proved to be a watershed moment. And back then, as you'll recall, many of the most actively traded options only traded in one exchange.
Yes. And
when that blew up, and it did so after a column I wrote about it, that the DOJ launched an antitrust investigation the day after we published a story about it in the Journal. And when all of that changed, it suddenly focused a lot of attention on the options market. And people realized, like, wait a second, they're genius traders in here that nobody really knows about. The firms here are incredibly important: Susquehanna, Timber Hill, Wolverine, and many others. And that brought out even more coverage. So like today, for example, I think Bloomberg may have 6 or 7, if not more, people just covering, equity derivatives. And that's not even talking about the cross-asset reporters and all the other people that are really focused on these more complicated and sophisticated parts of the market. Reuters is all over it as well. And the Times even covers these markets now too. So it's been quite something.
That's impressive, and it's quite amazing. And also, actually, it reflects in the American options volumes, where it has to be said things like, places like Europe are still hugely lagging in the way that they've managed to get out. We really don't have a Reddit phenomenon, and even to this day, if you could try trade, well, Ferrari options, for example, you'd think Borsa Milan would be super liquid, but actually it's a bit of a joke, frankly. Whereas you wait until 3:30 in the afternoon or 4:30 in the afternoon, that's not a Ferrari in the background, just in case anybody's wondering. I think it's a much more utilitarian vehicle, but nonetheless, interesting to see how those options are way more liquid in the USA. So tell me something. Oh, thank goodness, we get a bit of a pause in the. I got nailed right on by the ice cream van this week. It's obviously I'm just not paying enough attention in the last show before the summer break. So what happened then? You stayed at Dow Jones for how long?
God, I've been running the striking price column now basically for about 16 years. I'm not with Barron's full time anymore. I left to start Option Solutions, but I've been so fortunate to still be involved, and the community that we have around the column is fantastic, and I love the ability to sort of take, I call it information arbitrage. You take that which is known by a small group, and then you share it with a broader group, and to me that's kind of what gets me that's kind of what drives my engine for the striking price.
And this column, you just mentioned it, you're running your own company. So tell us a little bit about Option Solutions, because that means introducing yet another legendary figure in the options business.
Well, through all the years that I've been involved in the options industry, I've always been a big fan and admirer of Bill Brodsky. And he was the one person that I wanted to work with who I never got to work with. And then we got to a point in time where we came together and we decided to start this firm also with his son, Michael, in which we help ultra high net worth investors, foundations, retired executives with concentrated stock, and others of that milieu concertedly use options to manage their portfolios, to reduce risk, enhance income, all of the basic building blocks of the options market. And I couldn't be happier to be connected with Bill, who everybody knows as one of the true legends and statesmen of the global derivatives business.
Legendary statesman indeed. I used to have the pleasure of serving on the board of the Swiss Futures and Options Association, where he was an even much more long-standing director than I was. And also, if I remember correctly, for the general trivia buffs, Bill Brodsky was also the college roommate of a man called Joseph Biden. Whatever happened to him? Quite incredible career altogether. A really, really, really remarkable man from start to finish.
A funny factoid about Bill and President Biden. To this day, Bill Brodsky is the only person who's ever beat President Biden in an election. They were running for class presidents when they were in law school, and Bill got his fraternity out to vote for him, and he beat Mr. Biden. True story. Yeah.
The success of the block vote. You see what you can manage to do with these things. Presumably that was a form of ballot harvesting, which of course can be legal in the USA, where it may not be in other jurisdictions. Who knows? But yes, that's a very good statistic. I love it. The idea that he was the only man ever to beat President Biden in any election. So really interesting with Option Solutions. I mean, tell us a little bit, what has it been like? Because you only launched this business, 3 years ago, 4 years ago, something like that?
Yeah. So we've been public really for about a year, although we've been working together for about 3. We had planned to launch in April of 2020 at the Options Industry Conference, but our plans were waylaid by the COVID pandemic, and we just buckled down and tended to our business and managed through it. We announced it about a year ago publicly, and it's been super exciting. I think the options market in general is sort of bifurcated. There are many people who like to do it themselves. It's like playing intellectual football or chess, and then there are others who simply don't have any interest in it, but they recognize that it's this incredibly powerful tool. So for instance, if you retire from a company or you happen to have a very large stock position, the value of that position can and is oftentimes worth more than just the equity holdings. and using very conservative strategies. And of course, I'm referring to the covered call, that is selling out of the money calls that expire ideally within a month or two on your stock. You can oftentimes generate very significant and meaningful income. And that's something that we've been focusing on, and there's a lot of need for it, because what tends to happen in the options business is these strategies tend to be systematic, which is to say they do basically the same thing all the time, regardless of market condition. But what is needed, and this is the gap that we've stepped in to fill, is a more dynamic approach that can be customized for individual investors, and that can be evolved as market conditions change. And that basically is the genesis of Option Solutions.
I think it's a really fascinating business. I've got to say, I applaud you for doing it. I think it's a super idea. Doing it with Brodsky, Pair and Feast must make it very entertaining and exciting as well, given both of their knowledge bases, which is really, really super. And also, it brings out, I suppose, one thing that it brings out is also how amazingly cost-effective options have become, because we didn't discuss that. I mean, I traded my first option in 1985, and I'd still have been in school, and actually possibly earlier, possibly 1984. And I mean, I remember you were paying more or less an arm and a leg per contract at that point in time. I mean, it was a very significant two-figure pound sterling term. And you look at it now, I mean, you can, at that stage, it was almost not economic if you had a block of stock to write calls against it, for the simple reason you lost so much in commission. Whereas now things have become, I mean, wafer thin in terms of commissions that are charged.
Well, when the exchanges began to compete with each other, the fees immediately began to come down. They had been quite expensive. And one of the exchanges, I believe it was the CBOE, at the onset of what's now historically referred to as the multiple listing wars, decided to eliminate the customer fees. We have three types of orders in the options market: customers, firms, and market makers. Yep. And customers were being paid. They had to pay, but CBOE, as I recall, said, "You know what? Send us your business. We'll eliminate the customer fee." And of course, everybody else followed. And what happened since then is the broker dealers generally lowered all of their rates as well, and it just sort of cascaded down. I think historically it was probably a mistake for the exchanges to do that, but no one's willing to go back and say, "Oh, hey, by the way, from now on we're going to start charging customers transaction fees." Instead, what the exchanges do is probably even more even slicker, is they charge technology fees.
Yeah.
It goes from one hand to the other. Under a different format, and of course, the exchanges and the SEC just had a big tussle over market data fees.
Yes, and market data fees are a huge problem, particularly in Europe, where the idea of a consolidated tape remains effectively a pipe dream in every possible sense of the word pipe at this juncture, which is quite incredible. We have a question has come in. Actually, we have two questions, so let's jump to those. First of all, we've got Marianne Madeira. Good evening, Marianne. It's lovely to see you this evening. Hi, Steve. What's the best advice you can give a newcomer to the options market?
Well, thank you. So that's a great question. I think the best advice I would give a newcomer to the options market is to start slowly and to think about option strategies as something that you use to curate stocks. Where a lot of people get into trouble, in my view, is they think that they have a great sense for the option itself, for the shape of, for the implied volatility curve or the deltas or the more intricate measures of an option. And in fact, in my career, I've only met a handful of people who really are good at that. Where most people will do infinitely better is if they just focused on how can they use options to help them achieve conservative goals with their stocks. Would you like to buy below the market, sell above the market, enhance income, and reduce risk?
I think that's great advice altogether, Steve. That's really, really helpful. And I think we might have lost Stephen for just a moment. So hopefully he's going to be back with us in a second, because unfortunately, ladies and gentlemen, we seem to have a slight pipe problem there. Thank you very much for that question, Marianne. I think it's a very, very key, important thing. You know, the issue of options trading is a lot of people see it as a great way to go almost casino-like on the stock market. But actually, if you make options work for you, you can enhance your income quite significantly. There are lots of things that you can manage to do as you go along, which are all very, very interesting issues. So we are here, ladies and gentlemen, developing your options with Stephen Sears. Unfortunately, we've had a slight internet kerfuffle. At least, thank goodness, it hasn't happened from Valletta in Malta, where we're coming from this evening. So that means you can still listen to me. We are going to be taking a 4-week break in the near future. We will be back in September. We got fantastic guests coming up. Actually, very straight off from the very, very first show, we're going to be talking to the good folks of Expiry. They're going to be talking about building cloud-based exchanges. You may remember we had the opportunity to speak to Magnus Almqvist before, when we had a very interesting 3-way discussion about building the digital markets of the future. He's going to be joined with his CEO, Guy Malamed, who's going to be coming to us from his office in Israel. And we're going to be able to hear more about the very, very exciting and wonderful world of the Expiry project and how you can, in this day and age, build your exchange in the cloud. That's coming on the 13th of September, because of course the week before is US Labor Day, and therefore we know that lots of people are on their last drive home. Presumably, as they're on their last drive home of driving season this year, they'll be looking for extra coinage underneath the seats in order to manage to pay for the journey that they're taking. So, my name is Patrick L. Young. I am here with Stephen Sears. We're discussing developing your options. Just at the moment, we've had a slight problem. Hopefully, Steve is going to rejoin us from Long Island. Certainly very interesting to hear about all those characters he's been talking about, ladies and gentlemen. If you haven't met them, it is a joy to meet some of these fine wits and raconteurs, the likes of, obviously, well, indeed, not just those people we've been talking about this evening. You can go right now and catch up with our latest podcast. That is Success in the US Alphabet of Crowdfunding with Ethan Butler of Dalmore Group. Really, really interesting breakdown of Reg CF, Reg A+, and all of those other markets. You should be listening to that. You can catch all of the back issues and the back episodes of these live streams and podcasts. Gradually, we're working our way through the live streams, so therefore they're a few months in arrears. You get the whole panoply wherever you listen to your podcasts. Don't forget, there's also the Exchange Invest Weekly podcast, which gives you a roughly 10 or 15, maybe sometimes on an exciting week, 20-minute review of all the news in the world of exchanges. And of course, that is derived as content from Exchange Invest, my newsletter of the Bourse business. And we've had a slight technological gremlin there, but I'm delighted to see Stephen Sears has come back. You were just, I think, concluding beautifully your answer to Marianne on what was the best advice you could give a newcomer to the options market. And I totally echo what you're saying, Steve, because conservatism and common sense is a lot better than trying to make a huge fortune. And actually also in this market, it strikes me, there is just so much opportunity. I mean, with every option seems to have about 20, 30, 40 different expiries every year. So therefore, you've got the opportunity to manage to take advantage of a huge number of options over different weeks and months that just weren't there in the recent past.
I think my answer broke the internet. There's one thing that I'd like to say to Marianne that I learned is on the floor of the CBOE, basically, which was that bad investors think of ways to make money, but good investors think of ways to not lose money. And it's extremely simple, but I think extremely profound and powerful. And it's an idea that comes out of the options market. And I think if you think about that and try to apply that to your investing, that you'll be in a great spot.
I think that's a brilliant and very powerful missive. Actually, I have not heard that before, but it's absolutely spot on, because I must say my own experience of options trading has usually been that at most point in times, if you did absolutely what appeared to them be the mind-bogglingly wrong thing on a particular day, it usually worked out just about okay, because the point was in the floor. at the point when it looked like the worst thing you'd ever seen, that was precisely because volatility was through the roof and everything had gone in one particular direction. And the only thing it could do in the course of the next few sessions would be bounce, for example. Very, very powerful answer. And actually, following on from that, we've got another sort of retail investor question you've been asked this evening from Jane. Hello, Patrick and Stephen. Is it really viable for anybody to try trading options?
That's a great question, and I think after the the Reddit phenomenon and some of the excitement around the Robinhood and options trading, many people are wondering what the answer to that question is. And I would tell you that I don't think, not only are options not viable for anybody to try, they're not suitable for everybody to try. And the way to approach options is through the stock market. And if you focus on buying blue chip quality stocks that do things that you understand, and the companies themselves are profitable, their PEs are reasonable, and you've done your research. And by that, I mean you've read the regulatory filings, earnings reports, analyst reports, followed the news. When you feel you have that base of knowledge, then the options strategies can be like going to grad school or even to get your PhD. And I think that the options investors tend to be the very best stock investors as well. And in fact, the options clearing corp, which in the States issues and settles all options, has research that shows that an options investor is a much more active stock investor. And I know that to be also true from not only from Option Solutions, but also from the column and from the conversations. So if you're curious about it and you've never done it before, my advice to you would be start out super slow, be super conservative, make sure you understand your stocks, get your stock house in order, and then maybe and only maybe would it be appropriate and suitable for you to be involved in the options market.
That's great advice altogether. And I think don't leverage, and make sure if you're losing money that you always have a stop on anything you go into, because I think that's the worst thing people do with their options is they think, oh, it's only a few $100s here and a few $100s there. Well, as we all know, a few $100s here, a few $100s there, sooner or later you're talking about real money when it's losses.
That's right.
That's always a problem. And that leads us actually very elegantly into another question. We're having a great time. Thank you, Jane, for your question. Thank you, Marianne, before that. Stephen, how has your overall conservative option strategies changed or been adopted following COVID, if at all? Indeed, what's the biggest change since COVID you've seen on your strategies to help clients generate additional income and enhance investment returns?
Well, I think that's a great question. I think that what we've seen happen is that many people enter the options market through door number one, which tends to be I own stock and I'd like to sell calls against it to generate income and slightly reduce risk. Those people also have come to understand that stocks have certain life cycles. They ebb and flow like the sea in response to all kinds of different economic and financial conditions. And the change that we've seen since COVID is really not so much a change at all, I think, but a heightened awareness that you can use options via the cash secured put strategy, for instance, to buy stocks for less than they're trading for. And we've also seen interest in strategies that basically put buffers around portfolios and hedge them and try to put spread collars, which is a way you sell a call, you buy a put, and you sell another put that's farther out of the money. And you do that to sort of wrap your portfolio in a wrapper that hedges the risk. And those are the big changes that we've seen. The most fascinating thing to me is how fast the markets and the options market in particular adjust and react to changing circumstance. And so since the financial crisis of 07, 08 and into 09, more and more people have come to realize that volatility is something that they don't have to just sort of suffer silently. They can actually do something about it. And oftentimes one of the greatest ways to do something about that is with the options, option strategies. And we've seen the COVID pandemic has accelerated that understanding.
Very, very interesting. And obviously, I mean, how did you feel about this whole incredible Reddit phenomenon? Because it suddenly shone a light on something that I think had been bubbling away for years, but just because people started working from home, they had more time to really concentrate on the market.
Well, it reminded me, quite frankly, of what we saw in the Yahoo chat rooms of old. There was a time when, when Yahoo first started, it was one of the hottest stocks in the market, and people would go into the chat rooms that were associated with particular ticker symbols, and they would powwow with each other, and then influence trading. If you fast forward to Reddit, which sort of took whatever happened on Yahoo and accelerated it into this super powerful phenomenon. And remember what we talked about earlier, where since the global financial crisis, people have learned a lot more about investing and become a lot smarter. I'm talking Main Street people. And I think that the people in Reddit realized they took a page from the playbook of some of the hedge funds. And you probably recall, Patrick, and maybe some of the listeners and viewers do as well, that it was not uncommon, 10 years ago or even today, for somebody to break news, on TV or elsewhere about unusual trading in stocks and options. And I think the Reddit guys understood really well, better than most, how you could buy call options, get people excited about an idea or a theme, and then drive the stock up to your call strikes. And I think that's exactly what I think happened with Reddit. And it'll happen again, I'm sure, within the next 5 to 10 years, or even tomorrow. And it won't be Reddit, it won't be Yahoo Finance. There'll be something else that we don't really know about yet. That'll sort of enable the mob to communicate with each other better.
But the thing that's interesting is all of these communication tools that come along, the original chat rooms, Reddit, the amazing number of YouTube videos, which we've discussed before this show about, that are around teaching options. And I mean, I love it because there's every demographic, all human life is there talking about options on YouTube and trying to educate. The vast majority seem to be educating in an honest and reasonable fashion to make people better investors.
I mean, to me, that democratization of market intelligence is fascinating. Tom Sosnoff at Tasty Trade has been at the forefront of that. Thomas Petterfy at Interactive Brokers, most certainly, in terms of being amongst the first people to give people tools. So I don't want anybody to think that I'm disparaging Robinhood or even the Reddit people. I think people have gotten so smart about markets and investing. And you're going to see it, for good, and also used sometimes for not so good. I
mean, sometimes there's dark actors, but overall, I'm impressed by how positive the YouTube market is. I mean, there are some awful videos which are definitely, shyster-like people who are just trying to get you to overtrade.
Yeah.
But so much good education from every possible demographic.
I think that we learned at the start of the COVID pandemic that America in particular, and I'm sure this applies to other places around the world, is a nation of risk takers and gamblers. People love to speculate. And when you couldn't bet on horses or football or athletic events, all of that attention moved towards the stock market and then to the options market. And I think there's tons of great information out there. And I would frankly encourage anybody who's intrigued by what we do in our markets to check out some of the literature and some of the videos.
Yep, I couldn't agree more. Absolutely. And whether you want to go for the dry stuff that comes from some of the brokers like Interactive Brokers you mentioned, or possibly slightly more exciting at Tasty Trade, but across the board and all the way through to, there are all sorts of people from inside the burbs and inside the Beltway and beyond it who are talking about these options trades, which are just fascinating. So let me ask you a question here. We got one from Marcus Ward. Thank you very much, Peter Second, for your question before. Marcus is asking, how are you diversifying, Steve, to manage market risk in the future?
Well, if I understand the question, I think that my answer would be is the great thing about options in particular and stocks in general is you can define your risk. You can define your risk with putting call strikes. But what we're doing now is we're much more plugged in, and dare I say, even paranoids have enemies. that we're looking at our stocks in our portfolio and under management in a 360 way. We're always very keen on event risk. We're always very keen on economic data, and we're always asking ourselves, like, why could we be wrong? Like, we will red team ourselves. At Option Solutions, we have this very, very rigorous Socratic culture. When the investment committee meets each morning to review positions, we all bring a different background and a different perspective to it. Some of the guys are extremely quantitative. Some of the guys are much more focused on the markets and the news flows and the event. And when you combine all of those factors together, that's how we define risk, and that's how we manage it. Now, I'll tell you, a stock has a delta. You can think of a stock as having a delta of 100, and if you're short a 30 delta call, you reduce the risk of the stock by that amount. That gets a little bit more advanced than I think perhaps what you're asking, but I would tell you, just remember that bad investors think of ways to make money, and good investors think of ways to not lose money. If you use that, that'll help you to diversify and to think differently about how you manage your affairs.
And I think I would just add to that. Brilliant answer altogether, Stephen. Thank you. I would add to that, Marcus. Remember, a famous presentation by a great analyst in Sydney in Australia at a technical analyst conference many, many years ago. He said, just remember, if you make 15 to 20% per annum for 15 to 20 years, they put you in the textbooks. And I think that's something that, a lot of people, and particularly in recent years where we've been used to giddy stock returns over the year, the 12 months, a lot of people just don't understand the fact that those sorts of returns are quite incredible over a period of time.
What I think people should focus on, if you don't mind, is rather than constantly trying to hit home runs, which you're going to get from time to time, you'll get the mythical 10 baggers that Peter Lynch has talked about. But with options, for most people, if you can just hit singles and doubles forever, you're going to be in a phenomenal position. Not everybody can do it, and it's not easy, but most people can get up to bat and hit a single from time to time, or even a double. And so what's the metric that you should use? Everyone's always thinking that the stock market and the options market in particular is a field of dreams, but the humble dividend, which nobody really appreciates for all of its glory and power, is responsible for like 50% of all historic stock returns. So if you look at the common stock dividend and you use options as a way to sort of replicate another dividend payout, that in and of itself is huge. And you can just embrace compounding, and this becomes basic conservative stock investing with a little bit of of an options chaser.
Brilliant description, brilliant summary altogether. And I would give it in a pithy version, which is Gary Vaynerchuk, Gary V, the digital marketing communications expert. He always talks about jab, 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 right hook. And I think that's the perfect way to approach your options portfolio, because if you just keep jabbing all the time, you're always making money. You're always making, as you call it, the singles or doubles forever. It's a phenomenal pick position. And actually, if you get a home run, that's just such a shock. Now, let me ask you one very quick question, actually, because speaking of people on a home run, you've mentioned many great characters here, but you just quickly glossed over one who I think gets a huge amount of media time at the moment. He's one of the richest men in the United States of America. He happens to live these days in Florida in, I think, a degree of the lap of luxury. And I do believe also that if he keeps selling his stock at the current rate, he'll finally sell his entire position by the time he's only 375 years old. I'm thinking, of course, of Thomas Peterffy. He's probably the name in the options market that everybody thinks of or talks of these days because he's often on CNBC and so on. How have you found dealing with him?
I've known Thomas for many, many years and consider him to be a mentor. When there was a time when he was at Timber Hill before Interactive was even started, when he would write the comment letters to the SEC on various proposals, and I would print them out and read them on the subway on the way home. And over time, I got to know Thomas, and Thomas operates. He's one of those guys who's way beyond facts, and he sees the future. And he moves towards it. I think Thomas wanted to try to teach people a way to think about investing and also other areas of their lives. And which is something that we both recognize options as being a sort of a very powerful tool for. He created something on his website called the Probability Lab. And if people haven't seen that, I would check it out. And for the gentleman who asked about like diversifying risk, I would focus on the Probability Lab and look at that. Like you look at all the great options investors and all the good stock traders, and everybody's focused on probabilities. There was something that, a peer of Thomas's, if there is even such a thing, once said, it was Paul Tudor Jones, and he said something to the effect of, where you want to be is always, he says like, is like watching your risk. He used a fouler word. And he says, rather than trying to focus on all these crazy ideas about money and how much you're going to make, he said, if people focused just on how much money they have at risk versus how much money they think they're going to make, they'd be infinitely better off. And I think Thomas is of that ilk. And not only does he have a probability lab on his website, but what he also has are these incredible tools. And Thomas was perhaps the first person to ever trade options using computers, but he's also led the way in giving civilians, if you will, institutional quality technology to trade and invest.
Yeah, he's incredible. I mean, he's truly given heavy duty industrial technology, because having spent a small fortune on Reuters Icon and all Reuters, no, it wasn't Reuters Icon, I'm trying to remember now what it was called, the Schwarzatron back in the day, and all those others, there's a go there. You see, I'm showing my age now. Good grief. I mean, we were spending 20,000 a year on those sorts of calculators, and now you can go to Interactive Brokers and you get all the same information essentially for free by paying the Thomas Petterfee Fund, $1 a time to trade in options. So from one man who has been an incredible capital market revolutionary, I'm going to ask you the question we always round out the show with, Steve. Where do you think the capital market revolution goes next?
I think that's a phenomenal question, and I'm going to take a macro. I'm going to answer that in a macro way. I think that we're at a time and place when the underpinnings of the post-World War II global order are changing. And America is very much like Europe was, during, as we were talking earlier, during the times that led up to the Congress of Vienna. Instead of having these little European archdukes quibbling with each other, we in the States have various governors and Congress people. And I think what you're going to see happen now is that the world, which has built up into this sort of has become a global flowchart for capital, might splinter perhaps. And I think that you're going to find that that's going to create pockets of opportunity in different parts of the world in ways that we haven't really anticipated. And if the regulatory framework for exchanges in particular can be stitched together with technology and through various treaties, just like countries parlay with other countries, I think you're going to see perhaps in the capital markets more of a globalization of focus. And people might want to own something in Shanghai, and they might want to own something here in New York or Australia or in Italy. And you're going to see a diminution over years of this home bias, because people have become so sophisticated over the past 20 years, thanks to technology and other forces, that they're going to approach the markets differently. And some of these global exchange empires that have been built in the past 20 years are going to step in to fill the void. And it won't happen tomorrow, it won't happen in a year, but I think that's what will happen in the next 5 to 10 years.
What an interesting picture of a globally interconnected marketplace, something we've been working towards across the interweb for the course of the last 25 years. It has been a pleasure to develop our options with you this evening, Stephen Sears. Thank you very much for your input. Thank you for reminding us of so many fantastic people that we worked with over the years as well. I must actually go and try and look a few of them up, see if we can't get them on the show one of these days. Thank you also to our contributors. Katie Schaefer, really loved your initial comment. Ian Bonsor, Tom Laverty, Simon Huckle, Craig Richardson, Marcus, Ward, Marianne, Madeira, and Jane. We're going to be back in just over a month's time with Expiry building cloud-based exchanges. But in the meantime, don't forget, you can catch all of our output wherever you watch this, whether it was on Facebook, on LinkedIn, or YouTube. Just go search for IPO-VID. My name is Patrick L. Young. I wish you all a fabulous summer holiday, ladies and gentlemen. We will be back after Labor Day. We will be back on September the 13th with the good folks of Expiry. And on behalf of Stephen Sears, our excellent guest this evening, developing our options, and myself, Patrick L. Young, thanks for watching. Good night.